Hey guys, wanted to do a quick comparison about something we're doing over at Bell Capital. And when I was explaining to my buddy, he's in the financial sales space and the wealth planning space. I was like, look, we're really competing with banks and REITs and things like that. The thing that I want to do for Bell Capital is I want to help the everyday investor get access to institutional quality assets that they normally wouldn't get, that are usually reserved for the wealthy banks, institutions, and Wall Street. So when we were talking about that, because he's in financial sales, there was something that they were talking about even there that with the financial advisors, it was called selling away. Like they aren't allowed to refer you guys. Let's say you're an investor and you have money over at, let's say, a Fidelity or Merrill Lynch or whatever. Like their advisors can't advise you to say, hey, you should talk to Victor. Unless I go and register my fund, I jump through a bunch of their hoops and kiss a bunch of rings and take the knee, and then they'll say, fine, we'll be willing to do that. But they're going to take a piece of that. So let's say you were to invest 100,000. They're going to take 3% of the 100,000 you invest. So now it's not 100,000, it's 97,000. And then less of your money that you would invest with us would actually go towards your investment. That's how that works. So we bypass all of them. We don't use middlemen, we don't use brokers, RIAs, placement agents, any of that stuff. We go straight to you guys. I go to my friends on Instagram and Facebook and YouTube because I want you to get invested with us and I don't want to have to go through those guys. Not that they're bad, but because I got buddies that do it, but it's just not the same thing. So when I think about Bell Capital versus, let's say, Wall Street, because that's really all it is. Oh, wow. Can't see that. It's really all it is, right? Like if you're not investing directly in a piece of real estate, you're investing in a stock, right? So let's say you're investing in stocks. Why Bell Capital is better than stocks? Number one, because you're not when you invest in a stock, you're buying a stock. There's complete volatility in stocks. The other day, President Trump said they were going to raise the tariffs on China because they weren't acting right with the mineral stuff, and the stock market tanked. And then the next day, it went up. Nvidia said something was going to happen with AI, and then their stocks rose. And then the next day, I mean, later down the line, Elon, they don't like what Elon's doing with his pay package, and people argue about that, and the Tesla stock goes down. Like, so if you're tied to the stock market, man, there's complete volatility. Literally, we live in a day and time now where someone can tweet something and the stock market crashes. Why do you want to play that game with your money? Like the ups and downs, the ambiguities with your money, like, dude, like why bother? Just put your money in something like real estate that is consistent, it's slow, it's heavy, it's steady, it's going to continue to pay whether it goes, especially with multifamily real estate, the stuff that we look at, because it's tied to leases. So you'd rather your money in a lease that's a 12-month lease, it's a contract with somebody that's ready to go, whether it's a 200 unit building, 300, 150 units. All of this stuff is pretty steady. It's going to continue to happen, right? But you don't have that with stocks. And so you guys know, like the deals we look at, the two, 300 unit apartment complexes here in San Diego County, when the stock market drops, those real estate deals continue to pump out cash flow. They continue to pay bills. People continue to go to work, come home, and every month on the first they pay. Very different than the stock market. So next, we're talking about things that are associated with Wall Street, your IRA accounts and your 401k, right? So your IRA, 401k are also tied to the stock market, right? Because you have mutual funds, you got different funds with Fidelity, like we said, Vanguard, BlackRock controls all these things. You put your money in there and you just like, hey, you're leave it alone, or we're going to penalize you if you take it out early, right? Your Roth, your whatever, right? So knowing that your employers are incentivized to put money in, or you maybe let's say you have a SEP, which used to be a KEO, but now it's a SEP or Roth or traditional IRA. You're going to put your money in there and you can't touch it until you're older. The problem is that, well, it's not a problem, but Wall Street is using your money, churning and burning your money. Fine. Let's say you defer taxes or you do after tax contributions, but Wall Street's still going to use your money. They're going to put it in a ton of shit you don't care about. It's going to put it in Lockheed Martin. It's going to put it in cancer, drugs. Johnson and Johnson is going to put it in anything that they want to put it in to continue to churn and burn your money to make that money. They're going to do that, and then later force you to take that money out, and then you are going to get hit with a tax bill, even if it's pre-tax dollars. If you take it out and it raises your earned income, you are going to be hit with the next tax bracket, which is whatever that's going to be, because the IRS just changed it. But you don't have to deal with that with real estate. It's better off taking and converting your a qualified 401k plan or your IRA into a self-directed IRA, and then you self-direct that money out of the Wall Street casino into real estate with a company like us, like Bell Capital, and then that way your real estate continues to pay you. And then the real estate goes back and pays the IRA. And then when we refinance and give you your money back, it goes back to your IRA. You get the tax benefits of that. And then you continue to get that. There's no ups and downs in those things. You can consistently do that. All right. So that's how that's done, and you get it out of the stock market. Another thing people invest in right now, this is all the rage, gold. Gold right now has now surpassed anyone's expectations. No one was just betting on gold. Why? Because gold doesn't cash flow. And oh, by the way, to move your money into gold, nobody really trades gold. You can't go to like Neiman Marcus or Nordstrom Rack and buy your shoes and stuff like that with gold, or you can't go to like Whole Foods and buy food with gold. It just isn't going to happen. So while gold is now all the rage is in vogue, it's still not real estate. Real estate cash flows, you got appreciation, it protects your capital, and it's a real asset. I mean, naturally, people like gold right now, but that's what it is. And then the other thing people are really into, which this one is probably the only one up here, is Bitcoin, BTC, cryptocurrency, or Bitcoin, because everybody's into this right now. And as they continue to print money, as the value of the dollar goes down or they continue to print money, people are going to run to something more stable, which is Bitcoin. And Bitcoin also is just as volatile as the stock market. Today, it's like, I think it's like maybe 110 or 120. Last week, it was 106. The week before, I mean, it dropped all the way to 76. People are going to keep buying it. Yes, you should, but you should have your real estate cash flow by your Bitcoin. Don't you go work for your money, then trade your money into Bitcoin and hope that you're going to have some type of retirement or nest egg. So you want to be able to get away from those things because that's the problem that we see, which is why we're doing the things that we're doing over at Bell Capital, which is focused on one asset class that I think is better than all these other asset classes, which is real estate. Um, then the last one, which is not a Wall Street thing, but people consider it, is your own business. Your business, yours. I'm just going to write a zero right there. Why? Because if you take your money out of the bank, your hard-earned money that you work, you traded time for, and you're going to convert your money and you're going to dump back into your business, you don't need two businesses. 8 out of 10 businesses in America fail. There's 37 million small businesses, and I think 25 million of them have one employee, which is a nightmare. It's not a dream. So if you think about that, if all these businesses fail and all these businesses don't continue on, let's say your business is doing great and you were going to invest your money into more money into business, why don't you just take that money and invest it in a piece of real estate that pays you? One, it protects your capital. Next, it cash flows for you, and you get the tax write-offs from doing it, and you get the leverage and the scale from the real estate. Now, over time, your cash flow will actually be equal, or it should be equal to either lifestyle, capitalize on it for you, and or your cash flow is going to supersede the money that you need or you're making from your business, so you can scale your business and retire, or you can sell your business and retire, and you still get to live off the cash flow of your real estate investments that you had. So that's why Bell Capital to me is better than these stock market opportunities. Oh, I left this one off. Cash, which is really associated with the banks, not necessarily with Wall Street, but I mean, because very few, I mean, you get cash, you're not going to convert it into more cash, which is equivalent of why Bitcoin is doing well right now. But, aside from your businesses, like you don't need two businesses. That was the last one, but even just keeping your money in cash. The value of the dollar in my lifetime since 1973 has went down 86% and will continue to go down because they're going to continue to print more. As a matter of fact, I keep saying this, lowering the interest rates, like if you lower the interest rate so people can actually go and refinance their properties, buy more real estate, buy more stocks, grow their businesses, is another form of inflation, right? It is inflation. It's an inflationary activity. Why? Because as people borrow more money because rates are cheaper, they're going to spend that money they're not going to spend them on businesses, they're going to spend them on consumer products. And when that happens, more pricing on consumer products are going to rise. That is what is going to cause inflation because people have more money that they can spend and it's going to cost more. But why does this benefit real estate? Because if you have more money and you can spend it, you can hire more people for your business, you're going to make more revenue, and now you got more money to invest in a real asset, which is what we do at Bell Capital. So this is what I was kind of wanting to share with you guys. I know it's a little off, but I like to share a little bit to be like, hey, Bell Capital versus Wall Street opportunities. Because I was talking to my buddy, and yes, It's great that your financial advisor is going to tell you, hey, get a life insurance policy. They're going to sell you all their financial products to be able to get your money, to be able to hold on to your money because they trade and sell Wall Street products. Where do you think that your money stays? Stays with them. It gets kept into the Wall Street cycle. And if they even refer you to somebody that's not a part of their suite of products of insurance, life planning sessions, budgeting, take a little bit of money out of your budgeting, put it over here. This 50, 30, 20 type of investment strategy that people use, they're going to get in trouble for that. They get fired and can lose their license and never sell financial products again. It's called selling away. Look it up. But if you didn't know that already, that's why they can't tell you about some of the better opportunities that are involved in private equity and private capital and some of these real estate deals, the deals that we look at, right? And rather than go register with them and have them take money from you that should be going to you and your family, if you fully invest that money, that return on that money should go back to you, not to them, right? For the most part, I'm here. I'm available. You don't need to get some introduction to me. I'm right here all the time, every day. You can go to bell-capital.com, schedule a call. Somebody on my team or me will follow up and talk to you guys because we are here to talk to you. That's what I wanted to do with Bell Capital. I want to compete with Wall Street and the banks. They don't want to talk to the little guy. I do. I want to provide an opportunity for you. I want to provide the best assets. And in turn, you help me scale my business, whereas we can get big properties and we can turn around and we can all win because we're going to take those properties and we're going to go and dump those properties and have a Wall Street institution or company or bank buy our portfolio instead of us constantly needing to go to them. All right. So, anyways, I wanted to share that with you about my comparison of Bell Capital versus Wall Street or Bell Capital versus banks or any other investment opportunity or vehicle that's out there that you have an opportunity to play with versus real estate. I think real estate's hands down the winner. And we're talking about multifamily commercial real estate, big, nice properties in A locations, A class, A or B class properties in great cities and that are already occupied, already cash flowing, already making money that are newer. We're not talking about old beat up, fixer upper, heavy value add properties in these cities, these second tier cities that no one wants. And that's not what we're looking at either. That's called risk, guys. I don't want to risk any money. I don't want to lose money, period. So, anyways, I hope this helps you guys. Like the video, share this video, comment on the video. Let me know what you guys think. Where's your money? How much cash do you have in the bank in your savings account right now? How much stocks are sitting on you? Maybe you're a cash, maybe you're in a money market account. How much stocks are you sitting on in your Fidelity, your Vanguard, your Merrill Lynch, Charles Schwab? How much money do you have parked in an IRA or 401k? Like how much money is sitting dying in a bank account in some Wall Street thing? Or are you sitting on a bunch of Bitcoin? And it's time for you to maybe diversify that. Remember, your Bitcoin can go up and down, and it's not a real asset, right? It's still a digital currency, and at some point, it's valuable when it's traded. I mean, it goes up and down, but you got to take those gains and do something with them. Or is your money just stuck in your business? And at some point, you got to grow it and scale it and get it to where it needs to be, but it's not. And you know you need an alternative investment, just like real players do. Well, we're here for you. Go to bell-capital.com. You can schedule a call or you can register. You can say, get started. You can sign up on the portal. You got to be accredited. You got to be liquid and you got to have a great attitude. That's the partners we're looking for at Bell Capital because it's a long-term play, but we are here for you and we want to help you invest and take care of your family. All right. So I hope that helps. You guys have a great day today. Let's get after it. Boom.